I'm pretty constructive on Bitcoin and crypto because for the first time, really all the years I've been researching crypto, the regulatory environment is actually really open to the idea of allowing the innovation that comes from Bitcoin and crypto and the decentralization and the trust on the blockchain to allow us to innovate the financial system. So I'm really not only bullish on Bitcoin, but I really like the idea of some of these projects like Bittensor, which is really trying to create innovation incentives, make a lot of sense.
Tom Lee opens with a powerful observation. Markets don't move because of consensus. They move because of surprises. And in 2024, we've seen just that. Whether it's Tesla defying bears or tech stocks rallying in the face of Fed tightening, the engine behind these moves isn't always easy to identify. That's because investors often anchor valuations around things like earnings or dovish monetary policy, but overlook counterweights like recession fears or geopolitical instability. Lee argues that in these uncertain moments, it's essential to find signals that cut through the noise. For him, that signal was the high-yield credit market.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Well, a lot of times markets make big moves because of surprise. So we have to, like today, we're seeing it today with like Tesla. But the reason there's a surprise is that in a general sense, there's something that, let's say, anchors the valuation of a company. Let's say it's earnings or this S&P. Like, let's say that what anchors it is the Fed's dovish, okay? But then we worry about tariffs and recession. So like that's pulling down the market. You can always look for what will counter that argument of recession. And like for us this year, was the high yield market because high yield spreads need to widen to like 800. The spread over treasuries has to be 800 basis points. So if the 10-year is at 4%, high yield would need to be at 12% to tell you that a recession is almost guaranteed. But high yield during the tariff turmoil only widened by 150 basis points or so, maybe 200, which is just a growth scare, if even. So the reason we stayed bullish into the April low was because high yield said the chance of recession is probably 10%, whereas the economists were saying it was 60, and we could tell by positioning and what stocks were selling off. Right? The S&P down 25% has priced in like a 60 or 70% chance of a recession. So that's how we can kind of go on and say the market could make a full recovery because high yield is telling us there's not a recession and it's a better economist than economists. I'm pretty constructive on Bitcoin and crypto because for the first time, really all the years I've been researching crypto, the regulatory environment is actually really open to the idea of allowing the innovation that comes from Bitcoin and crypto and the decentralization and the trust on the blockchain to allow us to innovate the financial system. So I'm really not only bullish on Bitcoin, but I really like the idea of some of these projects like Bittensor, which is really trying to create innovation incentives, make a lot of sense. And again, these are the earliest days. So as Barry says, like we got to see how this plays out, but it's creating the right incentive system. So I'm really constructive on what's happening in crypto. He realized the first important use case for crypto was to allow people to actually easily acquire Bitcoin. And so Grayscale was the original financial plumbing between traditional financial markets and then acquiring a secure way to own Bitcoin. And as you know, that is literally Wall Street's biggest product today. So again, Barry was a decade ahead of Wall Street. So I do think that's why his interest in Bittensor, we all need to pay attention to because Barry does look ahead. It's the narrative. Like that's really what people talk about, but it's not even what's not necessarily driving share price gains. I mean, a few stocks have, of course, done very, very well in terms of share price gains. But the reason I'd say it's not necessarily the thing driving the stock market is that there's other narratives that do drive multiple expansion. So, for instance, if we had this AI story, but we thought the Fed was going to continue to tighten and actually reduce monetary liquidity, then we wouldn't actually have a rising stock market. I don't know if AI could power through a Fed that would be trying to kill the economy. Or if oil went to 300 because of some geopolitical event and was at a sustained level, and so we had a recession, I don't know if we could have a market doing well. And as strange as it sounds, I think it would be tough for the AI trade to work just because cost of money would be so high, or you'd have a lot of companies getting super cautious, and then AI would be forking and developing somewhere else outside the US. So the answer is narratives drive prices, but AI isn't the only sort of story in the stock market.
Lee also makes a crucial macro point. As we head into a period of likely monetary easing, durable, scarce assets will outperform. That includes gold, commodities, and yes, Bitcoin. When central banks inevitably return to some form of money printing, assets that can't be debased will stand out. This makes Bitcoin not just a speculation vehicle, but a core portfolio holding for institutions and individuals alike.
I'm pretty excited about kind of where the industry is, where the asset class is, and the kind of the potential going forward. I think there's definitely elements that kind of give me pause and make me a bit uncomfortable. And I think kind of given the likelihood of additional kind of monetary kind of easing and ultimately kind of getting back to kind of money printing, any asset that is kind of durable and kind of scarce is going to perform well. And so obviously Bitcoin and a subset of these tokens will kind of perform pretty well. And so I'm like cautiously bullish, but I think for us and for Bittensor, like I said, this is. I feel like every 10 years, I kind of have a bit of an epiphany and a big idea. And 10 years ago, for me, it was Bitcoin. Today, it's Bittensor, and we really just want to be a force for good. As people are starting to learn about Bittensor, reach out to us. We want to help with education. If investors want to get involved, we want to help them kind of navigate how best to kind of deploy capital. So please reach out. I mean, I guess I've been in the space now with 13, approaching 14 years, and I've seen it all. And I think it's fair to say that you could probably break kind of the crypto asset class down into, I look at it kind of three categories. You have Bitcoin, which kind of is separate apart from everything else. Then you have a very, very small number of projects that I think have utility, have a reason to exist, have, kind of investment characteristics that kind of, you'd probably, consider putting money into. And then again, I'm sorry, that's probably like, I don't know, 10 to 20. And then you have the rest, and the rest is really just kind of crap. And I think most of it's going to go to zero. I mean, it's good for gambling and speculating on, but from like a true kind of like, all right, actually kind of providing real utility, Bitcoin, a handful of projects, and then there's everything else. And so as there's been a growing number of attempts to kind of figure out how to leverage crypto for purposes of AI, we as an investor, we got involved with, we probably invested in maybe 10 or so kind of, let's call it decentralized AI type projects. And we invested in Bittensor in 2021. And over that time, it's the one that has really just kind of exploded and reached a kind of escape velocity. And as kind of having been in Bitcoin from the early days, every day I look at what's happening with Bittensor, and I draw all these parallels to the things I was seeing with Bitcoin back in 2012. I'm now seeing with Bittensor today. The early days of Bitcoin, somebody was Bitcoin, they would say it's digital money. They would say it's digital gold. They would say it's a money transfer system. They would say it's a ledger. It was and it is all these different things. So what Bittensor is a decentralized network on which AI applications are being built that are permissionless, that are decentralized, and that create an ingenious incentive-based system for anybody to essentially kind of build these applications, build these they're called subnets on top of Bittensor. And there's an underlying token called Tau that creates or provides the incentive mechanism to organize all these different participants within the network. So it's a very, very high level, but go deeper.
That's helpful, Barry. And Sean, can you pull up slide 18?
Absolutely.
Because I think this is explaining.
Can you see
while you're pulling it up, I got to say the report that Fundstrat put out about Bittensor, which I presume this is from, is by far the best report about Bittensor that's been published. So everybody should get a copy of it.
Lee closes his commentary with an invitation. For investors who see potential in projects like Bittensor and the broader movement in decentralized innovation, now is the time to get involved, not just to profit, but to build something better. His team wants to help investors navigate this new landscape, providing education, strategic direction, and long-term thinking. This isn't just about flipping tokens or chasing the next meme coin. It's about reshaping the architecture of the digital world. Please like and subscribe.